Hi traders. I just wanted to make this video just to highlight a trade I took recently. It's on the Australian dollar, and I just want to break it down to show you how I saw the trade and why I took it. So let's start off. This trade was counter trend. Now what I mean by this is, if we look at the current momentum, price had been moving sideways, it had found the bottom, it pushed up, pulled back, not a huge pullback, and then pushed on up. So it made a new high and a new higher low, so it was beginning an uptrend. Now if we look at the size of all the bars up to this point, what I like to see if I'm going to take a trade against the current momentum is that the price action setup has to be as large, if not larger, than all these bars that make up this swing point. So this is a bearish engulfing bar. It engulfs this bar here, and if you look at it in size, it's a big bar. So because we know it's counter trend, it's actually formed at a level where we'd expect some rejection, and it's shown a large rejection. We'd expect price to continue in this continue down, but we need to ask ourselves, where is price going to stall? And this level I've marked here is where I would consider the trade is going to have some trouble, where maybe the buyers are going to come back in and push this higher, a bit like the way we had a small retrace here and then price continued. So we need to know and take this information in to protect ourselves. I'm not going to go into the ins and outs of how I took the trade, my entry points and stop loss. You can find all that on my website, dontlettheforexdriveyouupthewall.com. But I just wanted to highlight the size of the price action is so important, and that was the main reason why I liked this setup. It was forming at a swing high, so we're looking always to trade from swing points, because this engulfing bar, bearish engulfing bar, is a reversal signal. So we're looking to trade the pullback down to this area. Now, as you can see, price managed to break through this area, it broke down, and look at this, it came back up, and could it close above? No. So now it acted as support, as resistance, and then price has continued down to the next level I had as key level. So it's pretty simple. We just need to know how to mark our levels and then look for price action. As long as the price action is large in size, it gives us the edge we need, and also the momentum for the trade to continue in the direction you want it to go. So I just thought I'd highlight this trade. It was a no-brainer, really, stress-free. I placed my entry point, my stop loss, my take profits, and left it alone. If we overmanage trades and overcomplicate the whole process of trading, it just turns into an emotional roller coaster, and turns out to be not very enjoyable. So I hope this has opened your eyes to maybe how simple trading can be, and I'll see you in the next video.